The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, going back here to the Diagnostic Trading Hour. It's been a really quiet morning, but we're getting a little bit of activity here on the other side of things. And just looking at the markets right now, what do we got? We got the S&P is currently down just over a point. The Russell is down 8 points right now, which is a big move compared to what it's done most of the morning. Looking over at the Dow, it's down 19, and copper going into the metals here. We got copper right now. It is down a little over 0.5%. We got gold down 1% now, so going right on down it's called. We talked about that this morning, down 11 points right now. And looking for that bounce, we got silver down 1.6%. So got to keep your eye on silver there. Looking on at natural gas. Natural gas is currently flat on the day. Oil is down about 75 cents right now on the day. And so they've been pulling back, and maybe it may pull on back now. Ran on down to one deviation to the dot. And moving on up at the moment. And let's see here what we got going on. But let's see. We got, that's our energies. And hopping on into the ag side of things, we got corn is down almost 0.75%, just a few points. We got soybeans down about 4 points, not a massive move. Looking over at the currencies, euro dollar's moved a bit, up 38 pips right now. We got Aussie dollar down 7, pound dollar up 46 pips. Looking on over at the dollar franc, it's down 25. The dollar CAD's up 29. Dollar yen is down 1 pip on the day, with the Aussie yen down 8, the euro yen up 35, pound yen up 50 pips, and the euro pound is currently down 2 pips on the day. All right, let's get you ready for next week. We didn't really have that much going on this morning, and we had the GDP on dollar CAD, but we can pull that chart up real quick. We'll look at it for you, and not spend too much time on that one specifically, but it's worth at least do a little quick review on. And let me move that on over here, and let's see here. We got the dollar CAD, and going into that, 1 second while it loads on up, and see where to go next. But I got one thing. Here we go. Okay, so looking over at the dollar CAD, had the GDP earlier this morning, checking this out over on just 4-minute bars, often what I like to look at here. And we had a nice little pop. Movement about 35 pips, but pretty much gave most of it on back. And now if I back on out a little bit, then we can maybe zoom back in a little bit more, right? And go right into where we at from release to now. And that would put us from the release to the current price, but it's right at 12 pips. So really just not a big move. Not a big surprise. Okay, so what do we got going on for next week? Tomorrow, by the way, the manufacturing PMI is going to come out of China tomorrow night. Obviously, nothing's going to be open, but that could have an impact on some of the markets opening up into Sunday, so just be aware of that. New Zealand and China will both be on bank holidays. Shouldn't have a massive impact on everybody, but they'll have, obviously they're in their Monday. So there'll be a bank holiday there. Then building approvals will be coming out on Monday night. Let me see if I got anything newsworthy on that, meaning that we can trade over on the upcoming report for Sunday. And let's see, that's going to be the Aussie dollar, 9:30. Okay. Building approvals. And let's see, the building approvals report. And we'll dive into it. Look a little bit closer, a little bit deeper here. See what kind of move do we usually get. So if you want to trade that on Sunday night, is there something you can take advantage of, like say for the 11 o'clock expiration, the 10 o'clock expiration? And my ideal setup on this, I think, would actually be to go in, and that's what I'm checking out the stats on real quick, hopping in like at 6 when the market opens up, and shooting for like the 11 o'clock expiration itself. So that way you get that maximum amount of implied volatility, or not, it's more premium to the time that is implied volatility. Doing so, you're going to like 8 pips, 12 pips, 4, let's see here, yeah, about 4 pips on that one. Go a little bit deeper. Just want to make sure I got this down just right. Okay, so if we started at 6 p.m., and we went to 11. Okay. So about, as much as 20 so far is about as high as I'm seeing. Just trying to make sure we got our numbers spot on. And every once in a while we may get a move like 30 pips, but it seems to do a pretty decent job actually of pulling it back on the report, meaning that it gives you time to hop in the trade and be out of the trade. Even if it does move quite a bit, it'll pull. A lot of times it has the tendency to do a spike and then just reverse right after the report. Many of these are literally like 3 pips, 5 pips, 10 pips. So probably see a couple 30 pip moves, but not that many at all. Let's see, 1, 2, maybe 3. Let's see here. And that looks like that would pretty much, there's been a couple big moves on it, but it's more of a rarity. And yeah, one time there was just an insanely massive move. That was like July of last year. I think we got like 100 pips on the trade. But normally, we're not getting near that much of a pip movement on the trade. And looks like hopping in early isn't really hurting us on the trade. I'd be looking for a solid 30, if not more, iron condor on this trade, and about half the time looking to make some decent money. About half the time looking probably say out of the last 12, somewhere between 6 and 8 of those trades you're going to have a nice profit over the last 12 months if you got the decent premium. There'd be a few times that you would basically break even. There's been a couple times that it would have went against you. Just make sure you're hopping out at that, 1-to-1 on it when you're looking on over at it. All right, so that gives you a news plan. Basically 30 pips, entering at 6, exiting at 11 for an iron condor. Now that's if you can get it for $30 or more. If you can get that thing and you can straddle $30 or less, then you could consider that. Understand half the time it won't even move far enough for you to take a profit. So you can always look at straddles, but they better be really cheap. Just understand that sometimes these things, I think you'll probably get about 20 pip move, 10 to 20 pip move on the trade. So you need a really like $10 cheap 5-hour straddle, which you're probably not going to get, okay, for that thing to work out well for you. But it's important to know your stats, not just your highs and lows. And you want to know how far does it move, by how long, and what is the optimal time to get in. Does it move too much before that happens? So you want to have all those different pieces put together. But like I said, $30 or more max profit on the iron condor. That's buying the lower one, selling the upper spread. If you don't know what I'm talking about, you need to hop on over right now to TFNN.com. Click on the Nadex banner over on the right side of the page. And then under trading, go to demo trading account. Get you started for free, costs nothing. You can set up an account and get $25,000 of funny money in there to test all this stuff out I'm talking about with. Put in your username, your first name, your last name, phone number, and email address. Click apply for demo. Takes about 5 seconds. They'll send you an email with a password. You'll be able to go right over here. You'll be able to click log in, get right in, start trading, start messing with things. They got education. They got a YouTube channel. They have a lot of information on their site. And, of course, over at TFNN, we got the spread scanner. We have all the education built in with that. The binary scanner makes everything a lot easier. So basically making a better way to trade, easier to trade, and by using that scanner right there. Now, What else you also can do is you can fund a live account. You want to get that demo extended out. You want to be able to have it access for a year or longer if you keep trading there. If you fund with just $100 in the account, obviously you're probably going to want to fund with more as soon as you're ready to do live trading. But the minimum requirement is $100 to fund an account. It takes about 5 minutes to fund it. If you place a trade, whether you place a trade of 100 contracts at $50 a pop, or you place a trade of one contract at $3 risk, if you place a live trade, you can call them up. Numbers right there on the bottom of their website, and they will extend your demo out for a year. So definitely worth looking into and checking out. But you can make money when the markets are flat. You can make money when the markets are moving. Range-bound markets, breakout markets, straddling, strangling markets. There are options, right? So with options, you got options. And I teach you a lot of different ways to trade them here on the show. And inside, the scanner there's all sorts of different methods you can combine together and mix and match everything. All right, well, that gets you set up for Monday. Again, 30 pips, entering or $30 minimum profit. Not maximum, but minimum profit if you're going to do a iron condor on it, looking at 6 o'clock entry, 11 o'clock expiration. Now, let's dive into looking at the rest of the week. If we go on over here to the rest of the week, sorry, that's Sunday night. So going into Monday, let's see, got German preliminary CPI. I don't really see that being on my list, but let me check. Yeah, got German GDP, but not CPI. So it's being something that has a consistent effect on it. And then we're going to go to retail sales. I usually like retail sales over on Australia. So that's the Aussie dollar. We're going to have a retail sales trade next week. This may be a good Aussie week. We'll see here. Looking at retail sales, pulling that on up, and seeing what all we can get. Then, so get you going early and ready for next week. We'll review these trades next week as well together. But overall, looking at the trade at night. Oh, yeah, retail sales. Let's see, the last report before that. I mean, you're talking nothing happening. So we'll dive into that one a little bit deeper on Monday for you and get you going. But let's see here, because we can do that Monday. It'll be Monday night that the trade's going to come out. So we'll dive into that one on Monday, get you all set up and running. But overall, it's like it's really not been a big mover. So it's going to be another probably iron condor trade. I mean, we're talking 25, 30 pips maybe at most of the time. I mean, every once in a while we get some big movers. Like on every trade, we're expecting like one or two of these things just to take off, okay? But the majority of them, over the last 12 months, very, very flat. And that's really where you're playing it. You got to compare like the same report to the same report. All right, we'll be right back after this. We're also going to have cash rate, basically the Fed funds rate for the Aussie dollar coming out as well next week. So, and GDP. So it's going to be a big Aussie news week. Stay there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And so just going over next week, checking things out. Let's look at this right here. We're on Monday. We got Tuesday. We're going to have the Aussie dollar cash rate with the RBA statements. We'll be looking at that. We also have construction PMI will be happening over on the pound. Digging a little bit deeper, checking things out. We got GDP happening that evening on Tuesday evening on the Aussie dollar. So, I mean, it's multiple Aussie reports. Moving forward here, looking at the services PMI right there on 4:30 on Wednesday, so that'll be another trade we'll be looking at. G7 meeting is going to be kicking into high gear, so and it'll be pretty interesting. So they'll be talking about the Ukraine issues. That's going to cause some, obviously some oil volatility, everything else. A lot of different volatility could come out of that, but they'll be meeting next week, and they'll be starting on Wednesday. Various reports can come on out. You want to make sure you're aware of that. We're going to have the ADP NFP report. Usually not a big mover. So we'll probably be, now the NFP, obviously a big mover. ADP NFP, not a big mover. But we'll be looking at how to set up a trade on that one on Tuesday for you, so you're all set up and ready to go. Looking at 10 a.m., we're going to have the Canadian interest rate, basically their Fed funds announcement. So we'll have that. We'll have a nice trade set up there. We'll talk about what it will take to make that work. And then going in, looking at the ISM manufacturing PMI as well. Crude oil inventories back to Wednesdays as normal. And trade balance, probably won't be digging into that one. Let me see here. Yeah, well, we do have I have the stats on it, so we'll look at it. We'll check it out. So yet another Aussie report. So probably be an iron condor on that one. G7 meeting still going on Thursday. We'll have bank rate, again, another interest rate, so a big interest rate week coming out of the pound with their rate statement and their asset purchase facility, all that fun stuff, and the EU bid rate. So we have a pretty consistent plan that we do, that I like to do each time these reports come out, where I do the pound, the euro, and then I do another euro, like straddle usually. So it's usually a couple of iron condors followed up by a straddle right before the press conference comes out, because that is the big mover. So anyways, a lot of interest rate announcements coming out next week with Australia, Canada, Europe, pound. Not any big massive changes, but nevertheless provide some great trading opportunities. And then we'll also have, of course, unemployment claims, but ECB press conference will be the story of the day as far as moving the markets on Thursday. We'll have natural gas storage, like usual, rolling on into Friday. Friday we're going to have employment change in Canada and the U.S., so usually a pretty dynamic, good combo. And we'll have NFP. The last few NFP reports I've actually been going in and doing iron condors on them. It's been really inflated. It might be different this time, just because it really depends upon where we're at by the end of the week. If the VIX is still at this incredible low that it's been at, implied volatility being so low, we might end up actually doing a straddle. Really have to look at it and see where the VIX is. So we'll have to fine-tune that one on Thursday, see where implied volatility sits, and see if that's going to be the best choice for us to still go with the iron condor, because, I mean, they'll be insanely wide. And, you know, you go in there and you don't want to straddle whenever they're, like, the implied volatility is really high. But if that implied volatility calms on back down, or stays calm, then you can work. If it goes, if it really goes high, then we definitely have that IV. But if it stays calm, we may be able to get a straddle it, which can provide a really, really nice risk-reward ratio trade setup. That's how I like to do them. But whenever things work out, we just got to. All depends on where that IV is at. And I've been talking about this off and on over the last couple of weeks with you. But going in and just looking at the VIX in general. So I'll pull that back up. We'll look at it where it's at right now. Still hanging out down there. Pulled back up a little bit on this last little surge down, but still in that 11-point range. And if I go back on out to the weeklies, you can see, I mean, it's just really hanging out way down here at the lows. Haven't quite hit that 11.05 yet that we hit back in 2013, so March of last year. Haven't got that low yet. But we're right on it, and if we do break it, then we have, it's just the market definitely keep running. But usually what we see, we've talked about this, is usually when it gets to a certain point like this, then that's when we're ready for, some sort of correction. And usually it'll be a pretty fast correction, and usually within about 3 weeks or so. So maybe next week with all the news coming out, depending on how that comes out. If not, look for the next few weeks having a nice pullback in the markets and be ready to take advantage of it when it happens. All right, stay right there. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. So, again, we're going into the VIX, talking about this, looking at it. It's actually pushing on back down now. And so it started to pull back up, but it's pushing on down, so it might get on down there. We'll see what kind of low we might even pull off this month. Who knows? Right now, we got a current reading of 11.55. And but, again, look for that pullback. One of the things, too, I've been noticing, I went in and pulled up, I used the seasonality feature, which is a great feature over in Thinkorswim. And we've been diverging from the normal seasonality. So would not be surprised to see, it's sort of like, it's almost like right here is what we've been in for this extended period, looking for that big spike to take place. We can go in and we can use some of this on the seasonality side to see, what do we got here? We'll go in and check out, 2-year. Okay, so 2-year we look at it, see that massive divergence happening, and then just an insane spike. So if that happens, that's that big quick pullback I was talking about. I was talking about going into like the first couple weeks of June, where we're looking for this big pullback in the market. So it's like we're on track for setting up for that move. If we go to 3 years, same thing, still getting that big pullback at that time of year. If we go to 5-year, looks like basically the exact same chart. We're going down to 6. We haven't had the pullback yet. It happens actually earlier. So and If we go to a little longer time frame, it looks like we're still waiting on the pullback. If we tie it down to monthly, that's the divergence. So looking for that pop back on up. And if we go to 10-year daily, then definitely still on the daily. Now, we're going to weeklies and monthlies. That's where you saw the bigger divergence. But if you go on the dailies, we on all of them, 1, 5, 10, years. It might even give us a 20-year. We'll see how we look on 20. On 20, all of them combined, you can see the seasonality of the VIX is popping up right going into June. So look for next week to be a highly volatile week, and looking for a pop. I don't know how big, of course, nobody does, but obviously I hope we get a nice big pop in volatility that'll pump premium back into the contracts. If we're doing in the money contracts and all that, it'll be a good time to be in and be hedged right now because premium is short. So if you went in and you do have a position on, this might be a time to go in and buy some premium, buy some puts. If you're long, buy some calls. If you're short, to hedge off any positions going into the weekend, going into the next week, and look at that implied volatility to grow. Would be what I'd be looking to see what happens. We'll see how it plays out. But we'll see if I'm right, if over the next 2 weeks, if we see the VIX have a pretty decent little spike come on up, and that would, like I said, be correlated with a market drop happening all at the same time. All right. Well, that catches us up on the markets. That gets you caught up on the news and the news trading plan coming up for the upcoming week. The next step, let's see where the markets are at right now, where they're trading, and what we might be able to do. Is there any setups or anything like that? But mainly just where are they at. We haven't done a walkthrough lately on just deviation levels and what kind of deviations we'll get. So I'm going to go ahead and pull up a really basic, simple chart for you. And let me go over here. I guess we could go into this. And I'll go in. Got a few positions on long there. Let me just add on some deviations. And we'll go in, we'll add on. Actually, that ought to be good. We'll add on a toolbar with it. And there we go. And maybe see if we have any spikes happening at the same time with some expected volume. And we'll flip it on over to 10-minute bars. Just take a quick look across everything and see what all is coming up. I'm going to bring this on down to 10 minutes. And we'll adjust our volume to 10 minutes as well. So we're looking at 10 minutes across the board. And right here, we've got deviation on there twice. We need deviation levels. So there we grab that. And then I'm going to adjust my expected volume, like I said, to be on a 10-minute time frame. So it'll match up with the charts. All right. So with all that in place, now what can we look at? We got oil moving on over. It looks like it moved down one deviation, popped right up to 0.7 on that. Looks like it's starting to pull back on it at the moment. And let's see what else we have. We got oil. Like I said, one deviation, perfect move. Like right to it, spiked, bounced. Very good point to go in and do hedges and things of that sort. Let's start scrolling through because we have not done this, like I said, in a long time. Let's check out where we're at on deviations on most of our markets. And pull S&P up. Really, really quiet day. Not a lot happening. Sort of came back up to settlement, oscillated around it all morning, pulled on back. Look at the volume. The volume has just been pathetically low. Except for that one spike we got right there. You can see how it's just way under expectations the entire time. Not hitting expected ranges, not hitting expected volume, not hitting a deviation. It's a very, very quiet day. Great day for doing butterflies, iron condors, things of that sort. Normally we get a whole lot more out of the S&P. Let's go down. We'll check out all the indices. We can check out right down here. We'll get all the U.S. indices. Check out Nasdaq. See where it's at the moment. And let's see what we got. Pop on up. All right, so down about a half a deviation. Actually, this is down a half a deviation from high to low. and just sort of oscillating right there at the moment. Like I said, just like on the other indices, we got that little volume spike, but beyond that, the last couple of days it's been pathetically low in volume. Those are the days that a lot of times you want to focus on your flat trading strategies. So doesn't necessarily mean it's always going to be the best, but often that's when you can get a lot of chop, and your trend. You may get a trend, you may get a nice little trend, but it's going to be a slow trend. Sometimes I'll even scale down to smaller bars. Like if y'all use like diagnostic bars, if y'all using tick-based bars, I may go from like 14 to 6 on a really slow day to help take advantage of some of that movement when nothing's moving along. Let's check out the Dow, and I'm sure we're going to see pretty much the same story across most of these. But the Dow, just nothing, absolutely flat. And then the last one, let's go in and let's check out. I guess we got most of them there. Russell we talked about. I think I've talked about it quite a bit, but we'll look at it one more time. And on the Russell, it is the one exception, I guess, to the case. So we haven't covered it today. It's moved on down about one deviation right now. So it's my favorite index to trade. It has the most volatility. So, being my favorite one to trade over here, you can see, it's out of everything that moved, it was actually the only thing that's really moved on down. And it's actually pushing on a deviation right now. We've volume's still been really low, though, all morning. It wasn't until we had this final pop right here that we got some decent movement on it. All right, well, that covers that. Let's go in and let's check out some of our other things like gold. We're going over at gold right now. And looks like oil is pulling on back now. So that's good for my spread side of things. And so on gold right here, we had gold down. Let's see, did we hit a deviation high to low? We did hit a deviation high to low perfectly. And came right on down to about 1242 there. We got that move. We actually had some decent volume on gold as well in the process. So it hadn't been just a horrible volume day like on some of the other markets. And so, always make sure that you're diversifying. You don't just want to be staring at indices all day. They're great when they're great, but when they're not, nothing's happening. It doesn't mean nothing's happening. As a futures trader, okay, you're a Nadex trader. If you're a forex trader, you should be a futures trader also. At least trading on Nadex, or, if you're not in the U.S., CFDs, or, whatever. But you want to have that diversity of markets. Why is that? Because you never know what's going to be moving. It may be metals one day, ag the next day, forex the next day, indices the next day. So by having, one or two of these things up all the time, then you have markets that are moving. And, look at what's moving and focus on it. So, or if, you want to do neutral strategies, look at what's not moving and focus on it. But, don't just limit yourself all the way down just a single contract, okay? I'm just going to watch. I'm going to watch NQ, ES, TF, and YM, and I'm going to feel like I'm diversified. No, you're not. It's all indices. That's like a stock trader watching 40 or 50 different stocks. They're all stocks, okay? So you want to bring in some currencies, and on the commodities, you want to bring in some energy, some metals, some ags, and look at those. You can go in with really low-risk trades. You can check out binaries. You can do the spreads, but also the binaries. Usually have a little better liquidity right now. So, but anyway, you check that out. On down, a deviation, plenty of volume right there on silver. And then we can also go in and check out if I have it updated. Yeah, copper. So, I have to double check copper. I trade it now and then, not all the time. It's one of those things, either I'm really into it or I just completely ignore it. But copper right now is down a deviation. So, it's actually down over a deviation high to low, and it's at the one deviation marker. So, chilling out right there. And let me check current gold price right now because I got a position on here. We got a little long binary trade on, so I want to check that out. We'll pull it on up again. Here we go. Once we do that, we're going to walk in. We're going to look at the ags, something that's I think I ignored a lot by a lot of traders. But soybeans, love trading soybeans. Corn is nuts. So corn, like either it moves just an insane amount or it doesn't move at all. And when it moves, it can move fast. I do not like trading corn on futures. Soybeans is fine, but on pure futures contracts, no way. It'll. I don't care where you put your stop; it'll move that far in 2 seconds. But looking on over, looking pretty solid right there on gold. So, moved on up, and let's see what do we got here. Yeah, so looking good on that trade. All right, so now let's go down. Let's check out our couple of our ag contracts here and see what's moving and shaking that we can use. All right, so on the ag contracts, looking at soybeans, pretty quiet day overall. But we go back and we can look and we can see there's some nice movement. We get some nice trends. It's very limited hours. So you really got to focus like right here on the middle. Very limited hours of trading. But in those hours, you can get some, like I said, some really, really good movement and volatility and some clean trends. It pops down, starts going back up, and I mean, look at that. I mean, you can't get a cleaner trend. And I mean, it'll trend nicely a lot. So I mean, that's a nice clean trend. Boom, breaks it, pops right all the way back up. Basically, a deviation down and back up move, and over and over and over again, grabbing deviation moves. Corn is it's fun to trade, especially on like certain ag report days and things like that. That's when I usually hop into it. But let's pull it up right now. We'll dig into it a little bit deeper. Gonna move down about half a deviation. It's just not as big of a move. It's like a 4-point move. So, the trends are not really. It's not really choppy. It's just if you're in there and you're trying to trade a futures contract, like I said, it can just oscillate so fast, and it makes it very difficult to have any kind of decent stop loss on it. But if you compare that to what we just looked at on soybeans, it's very choppy compared to soybeans. So I really I prefer soybeans over corn when I trade. And anyway, so that gives you the info on the ags. And we got our metals. Let's go back and we'll check out. We didn't look at natural gas. So let's check out natural gas. See where it's at right now. And pull that on up. Okay, so we got natural gas. And we're in here. Moving on down. Got a movement of literally one deviation from high to low, and then we hit another. We ran back an entire deviation from low back to high. So that's what that green and red line you see there is. It's basically measuring from the high to the low. We hit a deviation. From the low to the high, we hit a deviation. And so a beautiful thing right there. Nice move. We get a lot of nice moves in natural gas. You can see how there's blowing out deviations over and over again. And a little harder instrument to trade, though. It moves fast. And 1 to 4% move is not an odd day, and that premium's built in. If you're trading any kind of option, expected movement or implied volatility is always going to be built in. So people, they come to me and they're like, "What's the most volatile thing? I want to trade that. I want to trade that on Nadex. What's the most volatile thing?" I'm like, "Well, if it's consistently volatile, it consistently has implied volatility into it, so there's no edge." Okay. So if you want the consistency, then if you want to take advantage of things, you want things that are going to become volatile. So not that are always volatile. And that's why I like the news reports and things like that, because you can take advantage of that change in expected movement. Or maybe the expected movement is so perfectly built in that you can take advantage of premium collection. Instead of being the payer, you can be the collector. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're pulling back here to the Diagnostic Trading Hour. All right, so looking at everything, we got natural gas covered, we got all the energies covered, we got the metals covered, and we have the ags covered along with the indices. Now, let's check out what we got over on the Forex pairs before we wrap up today on the show. And I'll get it unloaded on up. All right, so right now we'll go through the pairs. We got Aussie dollar. And let's see what the Aussie dollar's done today. Let's see how the deviations have called it on the day. We got to move up half a deviation, down half a deviation, just about at a deviation high to low. We got 90% on a deviation high to low on the day. So a nice move call there, right there on the Aussie dollar. Looking at Aussie yen and tightening that on up. Then let's see what we got over here. We got to move down to a negative 0.7 deviations right there on the Aussie yen. Basically hit a 0.8 on the move. Going to euro pound, pretty quiet pair. Overall, the trade, usually not a whole lot of volatility in this one. And again, same thing. People go, what's the lowest volatility? That's the one I want to butterfly all the time. If it's always low volatility, applied volatility is going to be low on the trade. And staying right in between a half a deviation, which is only like 28 pips on the euro pound. All right, so that gives us euro pound. We'll dive into euro dollar. And on euro dollar, let's see, looking at this one, what do we got? We got to move up to 0.5, pretty solid 0.5 move on euro dollar. And you can see that right there. And running on up into it, and 0.7. So not too bad, but it's chilling out right now at the 0.5 deviation level. Nothing going on. And let's see what we got, euro yen. So we got the euro yen. All these pairs, by the way, I'm going over right now, you can trade over on the Nadex exchange. And euro yen got a nice move down 0.5, up 0.5, perfect 1 deviation move. Did really well, just sitting right now at the 0.5 level, pretty much parked for the day. Hopping in a little bit deeper, we'll look at the pound dollar and the pound yen. So pound dollar right now looks like it has moved 1 deviation. So moved right on up, actually about 0.86 deviations from low to high. And bounced right off of that 1 deviation mark, coming right back up to it again. Right now pushing up there on the high move from low to high of the day. And like the pound's a consistent mover. Pound yen is consistent and volatile. Good combination there. I like trading that quite a bit on a variety of different instruments. But looking at that, it's surpassed 1 deviation, went down to negative 0.5, past positive 0.5, up to 0.7, sitting at a positive 0.7 deviation move. So nice, clear movement across the board. Checking out the dollar CAD, a little quieter, sometimes a little smoother pair, often an ignored pair in currency. But despite all that, look at it. It moved on down, back up, got about 45, 50 pips out of it, got a nice move on up. And looks like it moved about 0.96 of a deviation today. So it pretty much moved 1 deviation high to low. Called it right on it. And dollar franc, last pair we got to wrap up after dollar franc is dollar yen. But yeah, all these instruments, like I said, you can trade over on Nadex. We also got the DAX and the FTSE and the Nikkei as well. But looking over at the dollar franc, looks like it ran on down. It hasn't quite hit. It's about 75% of a deviation move so far. Went on down, didn't quite hit 0.7, went back up to negative 0.5, and it's coming back down off of that level at the moment. We'll see where it ends up at for the day. And the last one we got, covered all the Nadex markets. It's a lot of stuff to cover right there, every market. But all the ones besides the international indices. We got dollar yen down 0.7, back up to 1, basically an 88% deviation move. But nice trend on the down and the back up move there over on the dollar yen. I hope you all have a great and safe weekend. I'll see you Monday right here on the Diagnostic Trading Hour. Come up, we have another great show right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.